Hello, it is the 6th of January 2011. Welcome to today's silver analysis, and the silver market is continuing to sell off to the downside. And I put on some Fibonacci yesterday on the blog, and the levels from the 28 lows, or the December breakout, towards the highs that was hit on the intraday time frame, which was above 31, stated that 29 and a quarter was the area it needs to hold for this rally to not become that of a failed move. Therefore, the failed move is either going to become this rally because it's finding resistance at this mark now, looking to continuously go lower over the next so many hours, or the failed move will be the break below this support level, and thus, if this is a failed move, you could expect a fast move to test the 31 level. And if the original failed move was the rally that happened in December, then you could expect a test of the next significant Fibonacci level, and that would be 28. 28 is important on Fibonacci because if you take the breakout lows of 17 and change from August, within these highs, 23.6 gets us a figure of 28-ish. And if you throw in this 50-day moving average, and usually it seems that they would meet up together, that would be a time where major support would be found. We have yet to have a test of this 50-day moving average during this rally. So a little bit of selling would not be anything big for the market. It would not change its current trend. If anything, as long as it stays above 28, then the market on the long-term time frame remains superly bullish along the way. Now, when we switch this over to the daily chart, if we look at all of the corrections this market has had, the first correction, through price that is, the first correction in here, it was a few days. It sold off from 25 almost down to 23, about 10%, and it managed to get going again. Then you had this correction, which is the biggest one. That spanned about 7-8 days, going from 29 and change down to 25, and that was a difference of about 17% to the downside. This correction was small. This one in here was short. It only was a couple of days, but it did manage to take the market down about 7-8%. And thus far, we've only had 3 days on this correction, and the only big major correction that we've had has been this one in here. Now, we draw some trend line analysis along the way. We can see that we've broken a trend line. That's kind of normal. This is a trend line in here. And that usually means one of three things. One, a reversal to the trend, which would mean a movement to the downside, where you most likely find a test towards this 26 level. The second one is that we range through time, which means that we hold in here, approximately in here, and then just trade sideways for a while. And the third one is that of a bear trap. If that's the case, a breakout above this trend line, something like this, and then boom, you get a big explosion towards the upside. So I'm going to finish this video off at this. This weekend I'll do more within the silver and the gold market. And all the next silver contest will begin, and that will be tomorrow. And you have until the weekend to make a prediction on next weekend's silver action. So that will be out tomorrow sometime in the late morning, early afternoon. Thank you for watching. Take care.